following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling, prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week. First day of spring, folks. Always do your best. Take action on your ideas. Doing your best means to take action on your ideas. You have many ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials up 169, NASDAQ up 34, S&P's up 2, gold contract down $7.20 at $13.1060 an ounce, silver down 14 cents, $16.18 an ounce, copper down 4.5 pennies, 302 a pound. Light sweet crude up $1.34, $63.40 a barrel. Notes and bonds. You get the 10-year note down 10 ticks, 120.02. 30-year bond down 25, 143.24. King dollar. King dollar up 608 ticks, trading 89.940. The euro is at 122.55 to $1 US. The yen is trading at 106.47 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? So check it out, folks. You get into the SPY. We look at the SPY. This thing can't even bounce. It's pretty amazing, actually. You know, yesterday you go downtown. We go downtown with 109 million shares. Guess what? You've done 40 million shares and you're up 98 cents. Pretty intense. If we go over and we take a look at the futures, what you have with the futures right now, the S&P minis, you're up 27, 25, 50, and what you have out here is the top of this range out here, and I expect this top of the range is going to get hit within the next 20, 30 minutes and then fail. And what we're talking here is the 27.27 to 27.29 area. Each time it's got hit, it spiked up there twice this morning. The first time at 9:40, second time at 10:30. Bottom line, you had some juice behind the bar on the first 10-minute bar, meaning at 10 minutes of 3. So that's saying that, guess what, this thing wants to spike it. We'll see whether it can hold it. But I do expect we're going to have that spike up there. And at that particular point, I expect we're going to give it up. But we'll see how that shakes out in the next few minutes. NASDAQ Composite, NQ. Let's go take a look at the NQs. So we have out there with the NQs, this is the NASDAQ futures. NASDAQ futures are up 550. You've had a low out here of 68.63 today, high, and we're coming right into the high at 69.27. And I can see the NASDAQ doing the same thing. You know, last bar, actually this bar has some good volume on it. So this baby's going to try to spike that 69, probably 27. Well, let's see. Well, no, yeah, actually we're right at it, 69.18. So this is going to be interesting here. 69.18 was the bar at 9:40 this morning. This is going to be a make or break right here to see whether it can get up a little bit higher. Dow Industrials, what do we have with the Dow Industrials? Dow Industrials right now, they are trading up, one second, Dow Industrials are trading up $1.65, and if we go to look at the diamonds and see that correlation, inside the diamonds, what you have is that you're up $1.58, you get 2.3 million versus downtown of 5.7. So bottom line, it's not even close. Gold contract. What do we have with gold? Gold, once again, this is going to be challenging tomorrow at 2 o'clock, and it's going to be challenging in a big way. Specifically, what it is this, is that we have been pushing into the lower end of this consolidation. Volume is lighter, but the bottom line is longer that you stay here, the higher the probability goes that it wants to break it. We got down to 1306.60 today, rejected it once again. We're at 1310. I'd really like to see this thing close inside the 1313, because at 1310, that is saying that that baby will get into this 1303.60, and more than likely, that could be tomorrow for sure. You know, when I say for sure, meaning that at 2 o'clock, the volatility is going to come in this market and come in this market in a very large way. King dollar. What do we have with King dollar? So King dollar is just the opposite, meaning that King dollar has gone higher, dramatically lighter volume, which is encouraging in the metal market is this, folks, is that, yeah, you're holding price up here, but guess what? When you are coming into the top of the consolidation and the volume is drying up that dramatically, that's normally just a test of that high, and then it lets loose. So this is going to be wild watching this whole thing shake out. General Electric. General Electric, folks, just a matter of when they're going to throw them out of the Dow. Bottom line, we'll see whether they let them get out of $5 before they throw them out. General Electric right now breaking its swing lows, you know, down 38 cents, trading $13.63. We put this back. You put this on a longer-term chart, and you're going to see it's been a one-way route. You know, General Electric, December of 2016 was 32 bucks. You're at 13 right now, and what is sticking out like a sore thumb is the high of the low, and that's $11.35. And you know, if we get into the 11.35, meaning, and you go, let's say the top of that bar, folks, is 11.35. The bottom is 5.72. If you get into it by about $1.50, you're going to 5.72. And the more that I keep looking at GE, guess what? Don't be surprised if GE pulls the good old BK and goes bankrupt, and we're going to see something come out financially that's going to basically shock us all. You know, my take is that, yes, they've cooked the books for a long period of time. The real question is going to be, did they cook the books in such a way that they can't get out of it? It's going to be pretty wild watching that whole thing shake out. Notes and bonds. So let's look at that note market. The note market out here, same type of setup, meaning, you know, notes pull back, dramatically lighter volume on the pullback. That's saying that they want higher price. You know, so what you have out here tomorrow, you get some 2 o'clock high volatility. Facebook has basically gone after its two high volume swing bars. Went after one yesterday, which was the 167.718. That was February 9th. Just went after the other one today, 161.56. Guess what? Facebook has a lot lower to go. Bottom line, you've broken the swings. You know, next is on the agenda is about 151. Stay right there, folks. We're coming right back. We have the Dow Industrials right now trading up 170, NASDAQ up 34, S&P's up 3. We're going to be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now is up 160. You get the Nasdaq up 33. S&Ps are up 2. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. And don't forget, folks, Basil's got a great show right here. Every trading day, noon to 1 Eastern Standard Time. A couple different ways you can get it. Just go to TFNN.com, hit Tiger TV. Real easy way to get it also is just go to YouTube. At YouTube, you search TFNN, comes up, subscribe, it's free. All the programs come right up. Now, as you come over to our website at TFNN, our man, Mr. Basil Chapman, he's going to be doing a webinar for all his subscribers. You can be a subscriber right now. This webinar is going to be on April 3rd. I believe that's hard to comprehend, but I think that's 2 weeks from today. In April, first day of spring today, March 20th, right? Bottom line, you want to be a subscriber? You can come over. It's 30-day money-back guarantee. You can be a subscriber. You can come into the workshop. Workshop is going to be on, is it a Tuesday or a Thursday? That's Tuesday. That's 2 weeks from today, man. On the power of the 4th highest peak in the Chapman wave. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. Yourself?
Very good. Thank you.
Cool, man. Cool. So let's talk a little bit about the workshop first.
So you were just talking about General Electric.
Yeah.
So General Electric back in the fall of 2007 made its 4th highest peak at a peak D at 42.15, plunged to 5.73 to a trough D. It made a high, it rallied again and made a high in July of 2016 at round number 33. What was that? Peak D, and then plunged yet again. So the power of the peak D, I'm going to show you right now, all the different things that we have for my subscribers. We took the peak that was made back on January the 26th at 26,616 in the Dow, pulled back, and very soon after that we went short, and we held the short pretty much all the way down, reversed before the low was made. The second day after the low was made, we went long, and we ran it up and took profits. It went to 25,800. That peak C that you see in the Dow, that retracement is a particular pattern that very often happens after the D. But what's really important about this is that there's an arch formation. If you keep your eye on the left chart right here, that's the daily.
Okay.
The weekly is the weekly is at a peak E, pulls back sharply, monthly is at a peak E, but this is going to be very interesting. The S&P goes to what? It goes to a peak D on the 26th of January at 28.72, sorry, an F. Then it rallies, it pulls back to the 200-period moving average. What does it go to just about 6 sessions ago? It goes to a peak D right there at 20, what was that high? 28.01. And now it's pulling back under the 9-period moving average. The weekly was at a peak D, very sharp correction, and the monthly is in a peak D. The QQQs, Monday, yesterday, a week ago, we went short the Dow right at the opening. So far that's been very good. We, on Tuesday, a week ago, we went short within a point of the all-time high in the QQQs. Why? Because the 120-minute was giving a peak D sell signal, and then the daily was about to confirm. So before it even turned around, we were able to use the shorter term to go short. So we've been short the Qs from about 174 something, and 175.21 is the all-time high, and it's of course pulled back very sharply, and it's in a leg D in the weekly chart. So this is really important in terms of the work that I do. It's not like every single D is going to give you the signal. I'm going to be discussing how important those Ds are, because there's another technique that I'll be showing as well, is that at those Ds, that's where you could get the sharpest pullback, but it's also where you could get a recycle. And I'll explain how you can look at the following 3 sessions to see whether you're getting a recycle that can actually take it all the way to a brand new buy mode, 4 higher peaks to go from there. So it's really important. For my work, it's one of the most important letters in the alphabet that we use, is that D. So there's a webinar on Tuesday, 2 weeks from tonight, 6 o'clock to 7:30 Eastern time for subscribers.
Nice.
And as you said,
great time for one.
This is really a good time for a couple of reasons. Is that we've got the Fed coming out tomorrow.
Yep.
If you look at let me just go to my long-term charts of the bonds. So this is the bond yields. So what are we talking about? We're talking about how important D is. Look what happened. This cyan-colored chart right here, the lower one is the 5-year, the FVX, the 5-year T-note yield. It made a D, and I'm just trying to, I can't believe it. So it makes a D at 26.82, and this week's high so far is 26.88. It's just gone to a leg E, and the 10-year is holding very well after that peak D. And my contention has been that because the 30-year, the white one, the TYX, the 30-year T-note, T-bond yield has only made a peak C at 3.22%. There should be a D to come, because that's what we're always looking for. So it seems to me that yields will be going up. They're going to be impacting the market. And I must say, this is the first time, because my monthly charts, there are so many Ds and Es. This is the first time that I'm saying what happens over the next week or so is going to be really important, because as we go into the close of March, we are still way below. Look, the S&P, if I go to the S&P is still, the high is 28.72. We're at 27.20 right now. This is a big distance away from that all-time high. And that means if this peak D, we start to see a pullback in the S&P over the coming 2 weeks, and it goes, at any point, if it goes below, I would say 26.30, there's a real good chance we're going to test the 25.32 low. So this is a very important point, and we've become very cautious. This is the first time we have just one long position, and we have Bank of America was so long, and mostly we're short. And you remember I spoke to you about PHM, which is the Pulte Homes?
Yes.
So look at there's that peak D right there on the 23rd of January at 35.21. It's gone from 35.21 to 28.99. So we've taken some profits in it. We still have the short position. Still, look at that weekly chart. Looks very weak, and a leg E, a peak E in the monthly. So this is the first time I'm saying that I'm looking at all. I'm going even the SMHs. We went short the SMHs on Friday. Just fractions off the top. No, I'm sorry, we went it was about 2 points or 3 points off the top. So we're short the SMHs, and that made a peak D. There's another D right there. So this is going to be a very important webinar for a couple of reasons. It's going to demonstrate the importance. It's going to demonstrate what happens when it goes in a daily and then a weekly, and you still got a D in the monthly. What are the implications if that starts to break down? So I think timing-wise, I think it's quite fitting that within 2 weeks we're going to know a lot of information, and hopefully we can apply that to the different techniques. And I'll also be showing subscribers what I'm looking for the coming months going into the summer based on the technicals that we are
and folks,
looking at.
it's real easy to get the opening call. You just go right to the front of the TFNN, go to the carousel, 30-day money-back guarantee. You get a great newsletter each and every day for a full month. You also get a great webinar coming up 2 weeks from today at 6 o'clock. Basil, have a great one, a safe one. Look forward to the show tomorrow.
Thank you very much, Tom.
Thanks. Stay right here, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 151. Nasdaq's up 27. S&P's are flat. Let's go take a look at Great Panther out here. So Great Panther gets some action out here today, folks. Your bottom line, you're up 4 pennies. You're at 122, but you get volume behind this move. And it's good volume, by the way. So you're coming into the swing of 122 with 1.4 million. This is sweet. So Great Panther's on its way to 128. That's how this is set up. Now, what's going to be cool here is looking at the aspect of, let me pull a few more of these up. Silver's up. Pan American Silver's not going anywhere. First Majestic's not great. Interesting. So this is, let's see, Heckler. Heckler took over a company yesterday. They're taking over a company. That got hit yesterday. That's getting hit again today. So this is just kind of like a Great Panther orbit right now. Yeah. So bottom line is that, guess what? Someone's buying it. That's the bottom line. Let's go to take a look at Twitter for our man, one of our other Tigers from Nevada out here. You know, Twitter's got this gap that's wide open. Twitter's down 365 out here today, 13%. You're off the highs. You get volume. This gap is wide open, $27.08. That will get filled. And Twitter, you know, bottom line, 4.3% short-term. Not short-term, short interest inside Twitter. Let's go take a look at some of the higher volume stocks out here today. So inside the S&P, Facebook is number one. That's down $6.10. Twitter down $3.63. GE continues lower. When I had Basil on, it was down to 34 cents. Now it's down 43. Oracle's got smoked. Oracle goes down 468. Let's go over and take a look at Oracle. So Oracle come out with numbers last night, folks. Bottom line, you know, what you can get out of Oracle, more than even the numbers, is that this February 9th downdraft, wherever it is, when you own equities, go see where it is, because we're going there. Oracle gapped lower today, hit 46.43. The high volume low is 45.92 inside Oracle. And bottom line is that now what you have, we were looking at Oracle this morning. What you have is that Oracle's been topping out since the first spike high of June of 2017. So it's almost a year that distribution has been happening. And if you take a look at it, what you'll see is that all your highs, a dramatically lighter volume, each and every high that got spiked, it was losing its energies, versus all the lows, much higher volume. And that's the building cause for lower price. And now we'll see how it handles lower price, meaning, because when you get down and when you test a high volume low, or a high volume high, what ends up happening at that particular point, the market's releasing more information for you. So the information you're looking for at that particular point is that, is the energy still there to go lower, or in fact, has the energy dried up and now you're going to get the bounce, and are there going to be buyers on the way back up? We get over and we take a look at the XAU, the HUI. XAU out here, bottom line going sideways, $78.10. Gold Bugs Index is still a big problem. This baby is down 234. Let's bring this back. Okay, so 160.25 is going to be game here. And we're at 168, so that's pretty intense. Now, it's coming into where we broke topside from in 2016. But the bottom line, that's the problem. That is a little problem, child. Let's go and take a look at the oil market. Oil right now is trading 63.40. That's up 2%. We're going to have the API numbers come out after the close today. And then we're going to have EIA numbers tomorrow morning. Hey, you know what? The way this oil is trading, I actually love it. Meaning I'd sell the heck out of it. This looks to me like you're going lower, man. And, you know, we'll see whether this is the Saudi minister, you know, basically on his PR trip across the world, including the United States, pumping up Aramco. But bottom line, there's nothing here. You're testing 63.44, 27,000 contracts versus like 700,000. The roll, well, it's April 18th, this roll. So bottom line is that, yeah, they got it up on price, but that's about it. We go take a look at, let's go to Amazon, take a look at Amazon. Amazon up 36 bucks, 15.81. Amazon's going after this high again, 16.17. Netflix, now Netflix was strong yesterday too. Netflix is up 4.51. That's going to be interesting. So it was strong yesterday. Now it's up 4.51, but this looks like it's just going to test out maybe the high lows of the high, which is that 318.60 mark. We'll see how that checks out. Let's go to Snap. Snap's never done anything extraordinary, but what does happen with the whole social media deal, they're all getting smoked. Snap is inside the gap. You know, the gap we're talking about is when it went higher on the earnings on February 6th. You went from $13.47 up to 21 bucks. You get back inside the gap. This is going to go fill 14.20. It's pretty sick. Now, what's really sick about this, folks, is that, you know, you had a $14 stock, goes to 22 in one day, and unfortunately, how markets work, it comes back in and fills the gap. And it's like, wow, that is percentage-wise, you are talking about some very large percentages. If you ever bought it up at that $21, you know, you're talking about 33% down in the aspect of a month and a half. So that's a big number. That's where you want patience in the marketplace. You know, when you see these gaps, let them go, sit there, put an alarm on your trading system, you know, give me a heads up when this thing comes back into the gap, because that's what it wants to get filled. Small caps. We take a look at the small caps out here. And what's intriguing about the small caps is this. Yesterday, small caps had light volume, rejected lower price. Today, guess what? You're going up, dramatically lighter volume. So bottom line, that's saying small caps also want lower price. There's some real divergence there in the context of how we did come down yesterday versus how we went back up today. Some of the Dow stocks out here, well, actually, let's go inside the Dow Industrials and see the strength versus the weakness. Strength out here today, we know anytime Boeing's up, it's putting some positive energy into the Dow because it's a price-weighted index. Boeing is putting 45 positive points. United held 16. Caterpillar 15. Travelers 13. Taken away from it, IBM. -8. You get Verizon -4. GE a negative 2.9, and if GE was ever a high-price stock, man, that would just be taking the Dow Industrials apart, because percentage-wise, that is the mover on the way down inside the Dow Industrials out here today. Big numbers. The XLF, let's go take a look at the XLF. Well, we have how the Fed moves out here tomorrow is going to be important to really understand. XLF, guess what? Building cars for lower price. You're $28.72. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 129. NASDAQ is up 21. S&Ps are down 2.5. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now up 125. Nasdaq up 21. S&P's down 2.5. Let's go into the energy market. Take a look at the XLE. Now, the XLE continues to have a tough time holding price whatsoever. The high volume swing low in the XLE, $64.45. You had 66.86. Bottom line is that this is going to be wild watching how this tries to test it. You know, you get the high volume low at 64, you break this low, and what's wide open, folks, is January of 2016. And that's sticking out like a sore thumb also at 56 bucks. Let me put this back just a little bit more. Put this on a monthly. Yeah, so this has been in tough shape for a long period of time. I mean, we bring this back 15 years. You're in the same consolidation. We've been in this consolidation. This is actually trading at the same price it was in 2007. That's pretty intense. 2008, it hit $38, but 2007 is right where we were. Looks to me like, hey, this thing is game down to 49 bucks. And right now you're at 66. What that would lay out, of course, is that would lay out that you'd have to see some kind of a large pullback inside the oil market. We take a look at some of the commodities out here today. What you have a sugar down 2.5%, copper's down 1.3%. You get nickel off 1%. Cotton caught a big bid out here today. It's up 2.2%. Gasoline's up 2.1%. You get crude up 2%. Cocoa's up 1.4%. Natural gas, we're going to have natural gas numbers come out on Thursday. That's up 1%. Soybeans are up 0.5. Wheat is up 0.5. So, you know, the Fed tomorrow, 2 o'clock. This is the first time that Powell is going to be there as the chairman, so you can expect his stamp is going to be on that statement. We'll see what that stamp is all about. Let's go over and we take a look at the NASDAQ composite. So the composite out here trading at 73.62. Now that jumped inside the lower range yesterday. So that puts game also down into the lows of the 9th of February, which is 66.30. The FTSE. This is probably the biggest heads up, I would say, for our markets, that where our markets are actually heading. So the FTSE in London, FTSE 100, was up 18 bucks today, trading 7,061. Well, anything under 7,069, folks, is a break downtown in spades. And that's what you got. You get wide price spread yesterday. You went from 7,164 to 7,034. Today you got up to 7,081 that couldn't hold price. That is the formula, number one, for the FTSE 100 to go lower. Number two, for our own markets, basically to start, at least test the February 9th level. And the way that the FTSE set up, it looks to me like the FTSE can go to 6,500. Right now, you're at 7,061. We take a look at the DAX in Germany. DAX in Germany up 90 bucks today. That's still into the February 9th level. The top of the February, well, it's just over it. 12,296. We're at 12,307. This is still, to me, building cause to get down. What the DAX had done, folks, is that the DAX blew away the February 9th swing low and then went after down to the price point of 11,830. So it was pretty extensive what the DAX actually had done. You know, we start putting that together. We're in a one-world market out here. And what does follow the Dow Industrials pretty closely are both the FTSE 100 and the DAX. You know, they're both industrial types of indices. That's how they shake out. Let's go take a look at FNV, which is a royalty stock, Franco-Nevada, inside the gold market. Bottom line is that, you know, this is trying to get off the bottom. This is kind of it's not encouraging yet for the gold market, but the bottom line is that that's getting off the bottom. We take a look at Royal Gold, another royalty company. I like what Royal Gold's doing. Royal Gold is telling us that metals are going to go higher. Royal Gold, it pushed on volume higher last Friday when the rebalancing was taking place. Today it rejected lower price. Bottom line has lighter volume. That wants higher price. We go over to Rheingold Resources. Rheingold needs help. Rheingold's not there yet. Rheingold, this thing got taken down good. 104 was trading in January, traded down to 79. Right now you're at 82.29. So when we just take a look at Rheingold, Rheingold is going to need quite a bit of buy-in in order to get up into higher price. No two ways about that. We take a look at let's go take a look at Walmart. So Walmart is going to basically open up 500 of their stores to put Federal Express offices in. Walmart still looks like it wants lower price. FedEx, FDX, that is going to come out with numbers after the close here. They're going to come out at 415 today. And let's see, this is going to be interesting. So, okay, FedEx is going to be a cool one to watch with FedEx, and this is why. I keep talking about the February 9th high volume low, right? Bottom line, FedEx has one. Also, FedEx has been trying to, the high volume low there is 226, you're at 250. The way FedEx is set up, yeah, the way FedEx is set up, it's going to test it. And we might see that test right after the close at 415. That's going to be pretty cool watching. UPS out here, that's still into the February 9th low. What's intriguing here is that, you know, the oil equities, you know, UPS, FedEx, they didn't rebound like the market rebounded off those high volume lows of February 9th. You know, the market did a pretty good rebound off of those. Those equities did nothing whatsoever. U.S. Steel, let's go take a look at U.S. Steel. U.S. Steel right now is back to where it broke out from, 38.59. And this is going to be challenging here. You know, U.S. Steel still looks like it's an ABC structure. Well, it is an ABC structure on the way up. You know, it can turn into a complex one if it gets below 34.65. But thus far, you know, it broke topside with volume. You're pulling back with lighter volume. When you do that, the real question is going to be, do you pull back under where it broke out from? If you pull back under where it broke out from, kind of a whole different ball game. Let's go take a look at Cleveland CLF, Cleveland Cliffs. This is an iron ore mining company. Okay, so the low here is 556. The high is 935. You're at 692. Interesting. Okay, so what do we got here? So if I put this on a monthly, well, I see what you're looking at. So the encouraging deal on a month, oh, this is dangerous though. Okay, so check this out. On a monthly, you have a high volume high at 1237. That being said, guess what? This never took out a swing point on a counter trend bounce. This is really dangerous, man. Because you had a high of 121. Yeah, this is dangerous. Stay right there. We'll bisect and dissect this a little bit more as soon as we come back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The Dow right now Dow up 120, NASDAQ up 18, S&P's down 2.5. We take a look at the volumes out here with the NYSE. You're at 500 million. That'll throw in probably about 750. Inside the NASDAQ Composite, we are at 1.6. That'll get to about 2 billion. So what you're doing here, folks, is that you're building cars. Specifically building cars is, you can build cars to go up, you can build cars to go down. We take a look at this S&P. It took a lot of energy, to come down as much as we did yesterday. SPY went from 274 to 268. Did it with 109 million shares. You're bouncing around today with 49 million. There's your correlation. Inside the SPY, of course, you also have the 2 high-volume lows. March 2nd, 139 million. The lows 264.32. And then the monster one out here, which is on the 9th of February, which is 252.92. If we do take a look at this and we bring this back, a bit more how we hit this level of the March 9th low is going to be really, February 9th low is going to be really important. The reason being is that what you've done is that you've broken the uptrend that we've been in for years. You know, the bottom line is that broke pretty concisely when we came down. You get back down there and you test it and you get a little bit lower. Guess what? Then you're talking some major damage here, because technically what you have there, we didn't have any volume on the way up since 2016. On the way down, you get monster volume coming down. You'd be surprised how quick you can get down into this area of 219 pretty quickly, and that'd be September of 2016. And watch this. If we actually take a look at this, that's not even that's almost a normal retracement in a market that hasn't retraced. Yeah, look, this is even crazier, folks. 201 is only a 0.382 retracement. That's intense. Stay right there, folks. Coming back with some numbers right after the close. FedEx is going to be one of the big ones.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. And it's the first day of spring. And I want to wish a great happy birthday to my son, Tommy. It's also his birthday out here today. Well, better watch out. Yesterday's gone, tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 116, NASDAQ up 20, S&P's down 1.5, gold contract down $7.70, trading at $13.10 an ounce. Silver down 15 cents, $16.17 an ounce. We are coming into the Fed statement tomorrow at 2 o'clock. Second day of the Fed meeting. First time Powell is going to put his imprint on the statement. And guess what, folks? This is going to have some volatility. I would have loved to see that gold market not at $13.10. I can tell you that. Because what is wide open, if we go over and we take a look at the gold contract, what you're going to see is that we have a spike that is laid out from last week that is pretty GCJ. Okay, so you get a spike out here from March 1st, 1303.60. Bottom line, I suspect that's going to get tested out here tomorrow. You know, 3 days in a row. The high, the low of last Friday was 1309. We closed out at 1312. Low of yesterday, 1307. Closed out at 1317. Low today, 1306.60. Closed out at 1310. Bottom line is that that's just sitting there like a big thumb that wants to get tested, and I do expect we're going to see that tested. If we go over to the silver market and we take a look at silver, silver has been the weak link in this metal market, bottom line, in a huge way, too. Silver was down 0.9% out here today, and bottom line, silver is 16. Oh, look at this. Talk about by the skin of the teeth holding on. So silver got to $16.10 today. Closed at 16.17, and where they had to close at the same March 1st low that I'm talking about in gold. Bottom line, in silver, it did close above it, which is great. That's a good indication. And guess what? That we'll get a test, and the test in gold should hold. What's intriguing, so here's where divergence is. Okay, so picture. Metals, they look to me like they're going to test that March 1st low. That being said, we go back over to the dollar. You take a look at the dollar, and what you're going to see, the dollar had price going with it today, but that's all it had. So we went up with 17,000 contracts. You're going into 26,000. The dollar, I suspect 2 o'clock in the afternoon, will spike 90.490. That's the high of the correlation of March 1st also. It looks to me like it's going to give it up. And the reason I'm saying that is that the dollar has gone up on dramatically lighter volume as gold has come down with lighter volume going into the same type of swing point on March 1st. When we put that on top of the bond market, because there's no doubt that the Fed is all about debt, what are the interest rates? What are the bond market doing? So bonds today, price-wise, same setup, man. Thing is down 12 ticks. The 10-year, you're at 120 flat. No bid whatsoever. That being said, you've done 971,000 contracts. You are going into, we're going into monster volume. 1.96 million, 1.3 million, 2.3 million. Bottom line, it's going to take a lot more for the 10 or the 30 to break down coming into these levels. So it's a heads up in a big way. Oil. After the 4:30 this afternoon, we get the numbers on oil. What's intriguing about oil up here, oil went up on air, folks. You're talking about big bid. You got $1.34. You're at 63.40. This thing, you know, we have the API out at 4:30. EIA tomorrow morning. Yeah, maybe you get a spike to the 64.24. My take is that that's going to be sold off, and we'll see whether that's just the aspect of Saudi Arabia basically pushing a bunch of propaganda out and, you know, trying to hold that price. They've done a great job of holding the price of oil up. There's no two ways about that. Some of the higher volume stocks out here today inside the marketplace, and by the way, this was, excuse me, a low volume market. You had Facebook down $4.41. Twitter was down 363. Oracle got smoked. That was down 490. They came out with numbers last night. If we go over to Oracle, what you're going to see in Oracle had that high volume low at $45.92. You trade to 46.43. But bottom line, it gapped away, went right after it. And if you want to see an equity going after high volume lows, man, this is Facebook. Facebook has basically taken 2 of them in 2 days. Facebook had a high volume low from February 9th, as does the whole market. That got taken down yesterday, 167. We came down with 88 million. Today it came down with 129 million. It went after the high volume low from September, which is 161.56. You hit 161.95. You closed at 168.15, but don't touch the stock, folks. Now what you have in the stock totally broke its trend going all the way back to 129. You know, so bottom line, I expect you're going to get some bounces out of here. It's not going to be a one-way route on the way down. But I'll tell you something. When you set this up, let me put it. When you set this up, what you're going to see is long-term, 132 is game here. 132, yeah, 132 to 135 is game. You know, now what I do expect you're going to see, you're going to get some kind of a bounce. You know, I don't expect the bounce the next few days. That's for sure. You'll get more sideways movement. Then you'll get some kind of a bounce going. We go take a look at the. Let's go TWT at Twitter. Twitter also got hit on the way down. Twitter's going after its gap, the gap that we're talking about when Twitter come out with numbers. The bottom of that gap is $27.08. Bottom line, you're at 31.35 right now. Twitter came off its highs, did come off those highs with volume. Snap also did the same thing. Bottom line, that earnings numbers came out, gapped dramatically higher. We gapped from a price point of $14.20 up to $22, $21.22 to be exact. Guess what? You're at 16 again. You're in the gap. 14.20 is game. You stay right there, folks. We'll be coming right back. We had the with the FedEx numbers. Dow Industrials finished up 116. Nasdaq up 20. S&P's up 1.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 116, Nasdaq up 20, S&P's up 1.5. Let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday and Thursday. Don't forget, folks, Andy's got a great show right here. Every Tuesday, Thursday, 5 to 6 Eastern Standard Time. All that programming. Easiest way to get it, just go to YouTube, put TFNN in the search bar. You get all the programming. Hit subscribe. Doesn't cost anything. All the programming comes up. Great TV programming. If you'd like to get Andy's newsletters, he has 2 great newsletters. He has a daily newsletter, which is called Daily Essentials. He has a weekly newsletter, the Technometer Commodity Report. Both of them, 30-day money-back guarantee. The way you do it, you go to TFNN, newsletters, either trading or investment or both, and you're off to the races. Andy Heck, what's going on?
I'm doing good. How are you, Tom?
Good.
It must be warm there. You're wearing a short sleeve shirt.
Yeah, it is. It's nice. Like 75.
Yeah, it's cold here, but you know, I talked to my son in New York. He's getting 14 inches of snow today.
Those guys have got hammered. This is like the fourth.
Hammered.
This is the 4th northeaster in 3 weeks.
It's crazy, right?
Yeah.
Crazy. Hey, so happy birthday to Tommy today.
Yeah.
And I have to tell you that today is my mother and father's 63rd wedding anniversary.
Wow.
Did you imagine?
So cool.
Isn't that cool?
That is so cool, man.
That's something else, huh?
That is something else.
That's good.
Wow.
That's good.
Unreal. Unreal.
Anyway, so, you know, my gut is telling me here that tomorrow we're going to see a kind of a mirror, a carbon copy of Yellen with Powell. You know, coming into each one of these rate hikes, gold has gone down, the dollar has gone up on the anticipation, and it's always been, I mean, 5 straight rate hikes. It's been kind of, you know, sell the rumor, buy the fact.
Yeah.
So really, we're going to see some volatility tomorrow.
It seems
no question.
Yeah.
And, you know, if he sticks to the gradual program, we could see relief rallies. You know, gold, silver, all of these things, they've been under a lot of pressure over recent sessions. And I think, you know, it's because it's, you know, the first rate hike of the year is here.
Right.
And, you know, I think we could see a recovery. That's what my gut's telling me.
Right. This is what I'm worried about. I'm worried about the aspect that, see, the way that the S&P is set up, the S&P, to me, wants to go hit this February 9th swing low, right? Mm-hmm. It's like, oh, man, okay. And gold didn't hold, you know what I mean? It's like, okay, man, you're down there. So it's like, okay, if the broad market wants to get down there, you know, it's like, oh, are you going to...
Risk off. Yeah.
Yeah, are you going to basically go up on the short-term rates, which we figured they are, but then are you going to have some kind of heavy statement that that's what's going to send the S&P, you know?
Well,
so,
that's the key. The devil's in the details.
Yeah,
always.
it is.
It's the statement, and then it's the press conference. And this is his first press conference. Now, I watched him before Congress, and, you know, typical central banker, it's kind of like watching paint dry. He watches his words very carefully, doesn't want to upset markets, but... you know,
yeah, and in that context, now that's what's cool. Even that's the divergence with me. I'm saying to myself, you know what? In that context, I think he can back off pretty dramatically, you know, and say, okay, you know, now we're going to see what's happening. You know what I mean? And if that's the case, well, then I think all the markets will bounce. You know, so.
Right. So my gut is telling me like that history tends to repeat itself, and we'll see. You know, hey, it's new territory tomorrow, no question about it.
Yeah.
New territory here. Now, let's talk a little bit about crude oil, because that kind of bucked the trend in everything today and went up.
It did.
And I think that the oil market is reflecting more politics than it is economics here.
It looks it. Yeah.
It's, you know, look, the Crown Prince of Saudi Arabia met with the president today. And the topic of conversation there, the key topic of conversation there is nothing other than Iran. And, you know, if we're going to ratchet up pressure on Iran, that's going to ratchet up tension in the Middle East, no question about it. And I think that's what crude oil is responding to here.
Interesting. Okay. Okay.
So
yeah, I can see
we'll
that.
have to see.
I can see that.
As far as the Aramco IPO is concerned, Tom,
that looks like it's toast.
Well, they're going to do it on the Saudi exchange. And that's just basically them saying, hey, they don't like the numbers that Morgan Stanley, Goldman Sachs, Deutsche Bank, JP Morgan, all of these banks and these experts in valuation put on it. They put too much of a haircut on the political risk in Saudi Arabia, which is probably correct. They didn't like the valuation, so they're going to go with a local market where they like the valuation, and they'll put it up there at some crazy valuation.
And they won't sell as much stock, though. They're not going to.
They will definitely not sell as much.
Did you see Prince Eloise by any chance? The interview? If you hadn't,
no, I didn't.
You
see
gotta
it.
watch
I have
it.
To see it.
You gotta watch this, folks. I mean, this is like he's like yelling. He's yelling. I said he was with Eric Schneiderman this morning on Bloomberg. He's yelling. No, there's nothing wrong. I didn't do anything wrong. They didn't say I did anything wrong. And he's saying, well, they just kept you, like, in there, like, and you didn't do anything wrong. Will the government say that? Well, no, the government's not going to say that, but I didn't do anything wrong. It was amazing, man. It was like, yeah, oh, when you listen to it, if you listen to this interview, folks, I'd never give that country a dime.
Right.
It's like,
well, I wouldn't do it anyway. I mean, I don't, listen, when it comes to human rights, when it comes to a lot of things, there's a lot of problems over there. But certainly, Aramco is the balance sheet of the country.
Right.
And, you're going to buy stock in that, and, they take their own family members and basically take money away from them. What are they going to do to shareholders? That's how I look at it.
Totally. Exactly.
And I think that's how the banks are looking at it, you know?
For sure. For sure, man.
So,
yeah.
They probably came up with a number like $300-400 billion valuation, and they spit at that number. They said, hey, we want $1 billion plus. And they said, keep $1 trillion plus. And they said, keep dreaming.
Yeah, right.
Right. So, hey, they said, okay, get oil to $500 a barrel. We'll give it to you.
Yeah, right.
So, meanwhile, I think that you see in politics in crude oil here. Now, natural gas should be doing much better. I mean, how many inches of snow have fallen, and how big is heating demand, in the Northeast? It's enormous. And this thing is just sitting here. I don't know. This is the toss of a coin here.
So we're 267, right? Yeah. And that's the lower end of a range, man. Yeah, I can see that.
And inventories are low. We're going into the injection season, lowest inventories in 3 years, Tom. This has been a fairly, I think it's a colder winter than the market had expected. So we'll have to see there. The rest of the commodities, look, they're under pressure. From grains to softs to everything. We're seeing pressure here. We're seeing the dollar come back, seeing the dollar come back. That's putting some pressure on things. And corrective moves. I'd like to see more of a correction. I'd love to be doing some scale down buying here in commodities, because I do believe that the inflation is rearing its head after all of this stuff.
Well, and if they put those tariffs on China, I mean, $60 billion, we'll be paying a little more goods for, a little more dollars for just about everything then.
And I was just going to say that, Tom, that right after this Fed meeting, the entire market is going to turn its focus back to tariffs.
Yeah. Well, that in the budget, right? They have to pass a budget, I think, in the next few days.
Budget, but tariffs are bearish for the dollar, in my opinion.
Yeah, there's no doubt. Stay right there, folks. Andy and I are coming right back. FedEx did come out with the numbers. That's trading up $12 right now. FedEx $9. FedEx closed at $2.51. That's trading $2.60. And when Andy and I get back, we're going to have those API numbers for you, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Talking with our man, Mr. Andy Hecht. We are talking markets. We're talking commodities, and as soon as these API numbers come out, we will get them for you. FedEx, so let's just take a look at these FedEx numbers while we're waiting here. So FedEx come out with numbers. The revenue, the earnings per share estimate was $3.11. They blew that away, $3.72. Revenue, $16.17 billion. That came in at $16.5. So you closed at $251. You are trading right now at $261. And when you take a look at this, that's going to gap higher tomorrow. I wouldn't be buying this thing, I can tell you that, folks, because what's still hanging out here is this high volume swing low that will get hit, and that's that. The high of that is 238, the low is 226. But bottom line is that you got some juice there. If we go to UPS and just look at UPS, that only put 50 cents under UPS. So let's but while we're waiting for the API numbers, let's take a look at cocoa. Okay. Which made a dramatic 50% retracement of the move from December 2015 highs at 34.22 down to last June's lows at 17.69. The midpoint was 25.95.50. We got up to 25.81. So that, that's pretty much close, $14 or so away. Now we're coming down a little bit. We put in a bearish key reversal yesterday. We're trading around $2,500, but there's a lot of stuff going on in cocoa. First of all, the crop from Ghana was downgraded. And also the amount of cocoa coming out of the Ivory Coast was downgraded, and we're having a lot of demand from India and from China for chocolate confectionery products. So the line in the sand here is around $2,600. If we can get above there, cocoa could run. Yeah, this is, so I got it up on a long-term continuous contract. And you can see this is, it made the retracement. It did. It did. It was a full retracement, too. Full retracement. Yeah. Absolutely. I mean, it was a long bear market. It lasted from December 2015 all the way to June 2017. We did a decent amount of consolidation, which was healthy. And now, it seems like the stars are aligning for cocoa a bit, Tom, because, you got supply issues, you got steady demand, and you have a nice technical picture here. And on the quarterly chart, price momentum is shifted higher in oversold territory. Yeah. So And we know, you know, bottom line is that there's more people, right?
Right. That's the bottom line. That's my mantra. More people.
I know. No, it's the truth, though, right?
More people with more money are competing for finite natural resources, and that's the bottom. And that goes for all commodities.
I know, which is pretty cool.
So when they get trashed, like sugar and coffee and all these things, take a look at the cocoa chart. That's the future. There's no question about it in my mind. But, you know, sometimes they require a tremendous amount of patience.
Yeah, no, they do at basically all times, you know. But guess what? You know, bottom line, unless the world ends, man, the bottom line is that we're not going to stop eating, man.
Exactly. And the bottom line is buy these things when they're at their ugliest, because that's where the opportunity is.
Yeah. So I get the first number. Let's see. The first number, we'll give you the full number. That was slow. API report, U.S. crude stocks fell 2.74 million barrels last week.
That's going to support today's move.
Yeah, so we'll see
what the gasoline and the distillates did. But, you know, that is supportive. You know, we traded almost up to $64 a barrel here today.
Yep.
But again, I think it's more politics. But if you get a little inventory data that supports it, you know, you're going to hold up here. You might even test 65.
Yeah, that's pretty intense, actually, when we take a look at
when you look at everything else, right?
Yeah, no, it definitely
is. Look at the oil stocks; they look terrible.
They still look at ExxonMobil. Bottom line is that it can't get out of its way. I mean, well, actually, look at it; they sold it down again today. I mean, you know, the low of February 9th is 73.90. You're at 73.99. That no bounce whatsoever. Chevron is better. But guess what? Not that much better. You know,
not that much better.
Right. Right.
No. So, the whole XLE looks lousy to me.
It does.
You know what? That's just going contrary to what's going on in crude oil. One will catch up with the other eventually, right?
No,
my bet is crude oil will catch up.
It will. Hey, let's talk silver until the rest of this comes out. So.
Oh boy.
I know. I had to get your head wrapped around it, man.
It's a dog, man.
When you go out and buy some, man. Call all your friends and tell them to buy some silver, man.
Silver, you know, look, silver. Yeah, I don't look at technicals on silver, Tom, because it's purely a sentiment commodity. You know, because it loves to violate support. It loves to violate resistance. It just does that over and over again.
It does.
Now, silver open interest is rising, but so is the silver-gold ratio, which is usually bearish for this, you know, for the precious metals. However, you know, tomorrow's the big day.
Yeah, I know.
We'll see how tomorrow's the day everything's going to move. I kind of expected weakness coming into this Fed meeting, so it's kind of like going into program.
Yeah. So here, get the numbers here, the rest of them. So let's go. We have so Cushing was plus 1.64 million barrels. Okay. Gasoline was minus 1.06 million barrels. Distills was minus 1.93 million barrels.
That's a bullish report, in my opinion.
Yeah, all drawdowns, right? Yeah, well, Cushing's up, but bottom line is that.
Bottom line is the economy is churning along.
Yeah.
And people are using more energy. That's the bottom line.
Yeah.
Listen, we got a question in the den about wheat. Let's just take a quick look at that.
Okay.
That's come down from you know, about 518, along with all of the grains, down to about 453. I like it. I mean, the bottom line here is that, you know, we haven't even planted the first seeds yet. And, you know, it's all about the weather. There's no question. We've had some funky weather in South America where certainly if you're living in the Northeast, the weather is crazy.
Yeah.
So, you know, there's a good possibility for crazy weather. And that's going to tell us what the wheat crop is, the corn, the soybeans, all of these grains, and each year's a new adventure, Tom, and we're coming into the start of that adventure right now.
Yeah, and what is intriguing, kind of how the way you said that I believe you are saying that, listen, the weather's been pretty wild in the Northeast, and that could set up that, guess what, in the Midwest, when we're coming into growing season or anywhere else that's growing, you know, we could get some decent, well, I don't know if it's decent weather, but different weather. Let's put it that way, right?
Yeah. Yeah, absolutely. I mean, you know, drought is the thing that the markets are scared of.
Okay, right.
And every year we get a scare. You know, we got one last year. We got one in 2016. we got a little bit of a scare a couple of weeks ago over the Argentina dry weather, but the U.S. is the 800-pound gorilla here. Now, you got to be careful with the tariffs because, if there is retaliation, it will be on the farmers.
Yeah, well, it's going to get intriguing there, right? There's no doubt that, I guess, what happened. I saw that the farmers in the Midwest, they tried to get a return phone call from the White House. They didn't get it, and so they showed up right at the gates, man, like 100 of them.
With their pitchforks.
Yeah, well, listen, last time I remember that, you're talking like 30 years ago. I remember some of those, right? Pretty wild.
It's effective.
Listen, folks, right here, 5 to 6. Andy, thanks so much, man. Look forward to the show in 20 minutes. Okay.
Thanks, Tom.
Stay right there, folks. Coming right back. Andy's going to be right back up with you at 5 o'clock.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. FedEx come out with numbers. Closed at 251.99. Is trading at 260 right now. Now here's this is going to be you see this happen in the metals market. I've seen this happen a few different times in the past, folks. Now this this has nothing to do with our TAFs, I would say, but First Quantum Minerals. They let's see. They produce copper, concentrate, and gold. Revenue-wise, let's see what they do here. So it's a monster company. They gross $4.1 billion Out of that, 2.8 is copper, 236 million gold, 148 nickel. They do a lot of their business in China, 1 billion in China. The thing that's intriguing about this, when you start pulling this down, though, watch this. They halted the stock because what you have here is that, let's see if there's any trades whatsoever. Well, before they halted it, it was $18.22. And what's going on is that Zambia just turned around and put a tariff on them. Let's see how they're assessing this, or what they're saying actually. Excuse me, folks. So First Quantum Minerals plunged the most in 2 years after the miner confirmed was hit with a $7.9 billion tax bill, which does account for 84% of its revenue. The company refutes this assessment, which does not appear to have any basis of calculation, will continue working with Zambia to resolve the issue. Bloomberg had reported that Zambia Revenue Authority was announcing a preliminary assessment for a prominent mining company this afternoon. Bottom line is that once that happened, they halted the stock. Last year, Zambia cut power to mines, including the pit owned by First Quantum. First Quantum is the first miner to be hit with a massive tax bill for operations in Africa. Last year, Tanzania sent Arcadia Mining a tax bill equal to almost 2 centuries worth of miners' revenue, and the Democratic Republic of Congo is moving ahead with a new mining code that would dramatically raise taxes and royalties. So bottom line is that is about as intense as you can get. There's no doubt about that. Let me just take a look at this for a second. Okay, so you can see how they went south today before they closed. Put this back. Yeah. You know, what's interesting here, it's not the end of the world. It looks like they're going to negotiate something out. So $16.88, but you know, that's down 25% of where it was just trading. There's no doubt about that. And guess what? Inside those metals market, folks, in particular, what you have, one of the biggest risk, always political risk. No doubt about it. You're taking minerals out of the ground. Guess what? Once you get the minerals out of the ground, when these countries need some money, that's one of the first places that they go to, and they go to pretty quickly. If you go over here, I'll show you something. This El Dorado gold has been having a hard problem, and this looks really tough to me. EGO. So EGO hit a low today, 103. And they're dealing with the political aspect here, and they have a couple of them actually they're dealing with. This is an equity that in 2011 was $22. You're at $1.03, and you're at $1.03 with way too much volume. And their problem, they get a few different problems. One of the bigger ones has to do with getting the gold out of the ground and getting development going on a few of their projects, and thus far they haven't been able to pull that off. So it's going to be pretty wild, you know, if in fact the squeeze goes so dramatic that it puts them out of business. Most times what you see is that the countries will put the squeeze on you, but the bottom line is that if they do squeeze too much, which in El Dorado's case it almost looks like it may happen, then no one gets anything. You know, when we watch this, and if you, I'm going to put the gold contract up and show you what was, I'm going to put this back 20 years. And, you know, last run in gold, right, it was, you know, it was really a straight line move. 2008, you're at 698. 2011, you're at 1920. Well, what had happened, even in Nevada, which, you know, is basically a great place to mine. The U.S. is a great place to mine. But what did happen is that when we were up at basically about 1,500 in gold, guess what? There's plenty of politicians that start talking about that, hey, hold it. You know, maybe we should give these mining licenses out different in the aspect of how you can mine in the United States. Because the way this works, you know, and it's not that the licenses cost anything, folks. You're talking about very inexpensive money. If you think you're out in the middle of the desert and you think you get gold, guess what? You can go do it. You know, now trying to get the mine open, that's a different ball game. But bottom line is that the license itself is not expensive. It's finding the dirt, getting the ore out. Then once you get the ore out, can you release the ore from the rock at a price that's less than the price of an ounce of gold or silver or whatever else you're getting out of the ground? That's one of the biggest deals, you know, inside the market. And, you know, it's a big number. If we go over, let's go over to the platinum market, actually, and take a look at where the platinum market is trading right now. So look at this. We're at 944 in platinum. This is pretty amazing, actually. And gold is still trading out here at 1310. That's quite a differential. You know, maybe tomorrow's the day to buy platinum, because platinum is broken the 945.90 mark. It's like you're going to be game for 914 again. The last low in platinum was in December, 873. You know, the real question is going to be, you know, in the platinum market, is that are the electric cars going to basically be so dramatic, which they very well could be, that you're not going to use as much platinum anymore for catalytic converters. You know, thus far, I think one of the main fundamental reasons that you're down here inside the platinum market is that palladium, you know, bottom line, took a lot of that market share. That being said, guess what? If you're looking for a nice metal and you're looking for a longer-term store of value, I'd say platinum is still the number. That's, you know, you get it. Yeah, it's pretty dramatic, actually. Now, when Andy comes up, we'll have to figure out how long it's been under that price of. In fact, I'll put it up at the break. How long it's been under the price of gold. I remember when Andy and I first started talking about it. It was like it's probably been there for 4 years now, which I don't know if that's unheard of, but it's pretty close to being unheard of. I think we were talking about it was unheard of when it was there 2 years. Stay right there, folks. We'll be coming right back. We had the Dow Industrials finish up 116, NASDAQ up 20, S&P's up 1. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, if we do go over, let's go over and take a look at this. So what I have up is I have a platinum chart up, and we're comparing it to the gold chart. So this inverted, meaning that the price of platinum went below the price of gold in April of 2015. So we're dealing with 3 years. I knew that'd been quite a bit of time. I'm going to bring this back even further, though. Let me see. So I just want to see how many other times this is done. So if I go back 20 years, okay, so I go back 20 years. Man. Look at 1 second. I got to go back 25 years. I can see it in 1999, but this is so unusual. It's amazing. So, yeah, you go back to 1997, they traded about the same. And that's the first time, 1997, during the debacle in 2008, what you did have there is that you had the aspect of, they were both trading around the same amount. I bring this closer now. This is amazing, actually. Yeah, whatever this is, oh, I see. That's interesting. So it did in 2008. Yeah, in 2008, the price of gold went over the price of platinum. But when we take this on a longer aspect, the last time here, which is the big one, is the 2015, April of 2015. So bottom line is that we'll see how the rest of this shakes out. What you can expect out here tonight, what you want to watch tomorrow morning, folks, is going to be the FTSE. The FTSE 100 in the UK broke its low, and I'm talking about the February 9th low. That's a big number. DAX in Germany, right at it. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need's right inside you, folks. Have a blast with it. Stay right there, man. Mr. Andy Hex coming right up. Wow! Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.